Hello, everyone. Let me just start by taking a quick survey to actually get to know you a bit better. Who in this room actually work for blockchain startup, crypto scale-up, crypto startup? Okay. Anybody from the traditional space, financial institutions, banking? Okay. Anybody selling to financial institutions? Ah, all right. Okay, so let me just take that. So I'm Clarisse, CEO of Defense. We basically provide security for crypto. And we've designed an API that is a bank-grade API that we sell to crypto scale-ups, crypto startups, and banks. 1 year ago, when I told people that banks would actually start adopting crypto, this is the reaction I had. Nobody would know. I would actually spend 30 minutes telling them why it was going to transition, why blockchain mass adoption was coming. This year, it's totally different. Everybody is super excited. You can actually read in the news that banks, be it JP Morgan, Goldman Sachs, have already opened desk to provide crypto to their customers. The EIB this year actually issued a bond on blockchain that has been structured by Goldman Sachs, Société Générale, SocGen, and Santander. That's a big first. So not only on the crypto asset space, but also on the security tokens, banks are moving fast. Central banks are talking more and more about stable coins. So definitely there's been quite some change this year. But let's take a step back. Not long ago, a few years ago, I would say maybe even last year again, you had the way people would see crypto and blockchain was as scary. Blockchain and crypto was seen as a way to actually launder money, to actually, it was a technology that for those institutions was completely seen as unpractical and absolutely not fit for regulation. Basically, for the past 10 years, crypto has been looking like that, like the youngster adopt that was absolutely not fit for the institutional world. And also like this, just basically throwing money everywhere. And finally, completely ruthless. So obviously, banks were not going to actually move to crypto in that type of situation. Why? Because banks are animals of trust. It's their business. First and foremost, banks monetize trust. That's what they do. They can be associated with a technology, with an asset class that doesn't provide the sense of trust. What do they need? They need security. They are heavily conservatist. They need regulations. And there are also institutions that put a lot of controls in place. Vaults, that's actually the basic and the first, I would say the primary purpose of a bank. Originally, it was just a vault and someone actually safekeeping your money for you. They have a lot of routines in place. So when you work in a bank, I actually spent 10 years in investment banking before launching Defense. You have extremely heavy process. It's designed to create a culture of control. A lot of rules, whether they are internal rules, but also rules you need to comply to in order to be regulated. Audits all the time, audits of your processes, audits in order to remain compliant. So the question is, what changed in 2021? Why banks were suddenly all decided and all welcoming the transition to crypto? Nothing happened overnight, absolutely nothing. First, it came with blockchain technology. A few years ago, 5 years ago, 6 years ago, when you were working in a bank, everybody was extremely excited about blockchain technology. They were saying blockchain as a way to enhance their process. The number of products that have been designed already 5, 6 years ago in order to actually enhance trade finance is huge. Blockchain had been seen as a way to actually also enhance a payment industry that is very, very outdated. So it all started with blockchain. Then, especially in 2019, crypto regulation started to be a bit more mainstream. In 2019, around 40 countries launched regulation, and that started putting bank and institutions, financial institutions, hedge funds, asset managers at ease. It defined a frame in which they could work, in which they could start having clients, in which they could start actually commercializing their offer. Market alternatives. 5 years ago, there were one provider. You wanted to do the custody of your digital assets. You had Ledger. You had a few other HSM, but not much. Market alternatives are extremely important for banks when they actually run their RFP process. They can't have only one provider on that. They need to run their due diligence, and without market alternative to support their choice in choosing the right technology, well, it's impossible for them to move to the space. They are extremely risk adverse. Growth. If you had put $100 on the S&P in 2011, you would have today $353. If you had put $100 in Bitcoin, well, you would have much more than $3 million. So those type of growth rate absolutely excited banks. Another thing, we are in a state where interest rates are extremely low, and they have been low for the past years. When you put your money in a bank, you don't earn anything. I remember as a banker a few years ago, I actually asked our client, please don't deposit money with us, it costs us too much money. So the growth rates that DeFi offers was definitely very attractive for hedge funds, for any financial institutions. The community love, that is super important. What is currency? Currency is a very personal thing. It's a trust. It's a trust you put in an asset, right? And without this culture gathering around that community, you don't have trust. Trust again. So the community starting actually praising Bitcoin, praising Ethereum, praising crypto assets, started to make a bubble effect, and that community love expanded to the traditional space. Corporate adoption was a big move. At the end of the day, banks have clients. If their clients don't ask them to actually custody their funds, they won't issue new products. If their clients don't ask them to operate in the DeFi environment, why would they, you know? Tesla, moving to the crypto space. MicroStrategy. The corporate adoption was extremely big and was the key factor for, I would say now, 10% of the largest bank to issue RFP this year to be able, at the end of the year, to provide custodial offer of digital assets. And this is happening now. Last year, there were absolutely no RFP from large institutions to start looking for providers that would enable them to build crypto setup. Market liquidity, of course, once again, banks being extremely risk adverse. Without market liquidity, impossible to operate. They need to hedge themselves. It's the basics, it's the 101 of actually their risk policy. If the market is not liquid enough, then impossible to operate. And of course, FOMO. We talked about the growth rates. It's the institutions missed on a lot of growth for the past 10 years. FOMO was big, and all that unveils in 2021. So basically, it took 10 years for banks to start adopting crypto. And when I'm talking about starting adopting crypto, is really starting about thinking what type of crypto assets, what type of digital assets am I going to offer to my clients. When we talk about financial institutions, it's a very, very wide space. You have the payment industry that was suffering heavily from actually an infrastructure that was completely outdated. They saw in blockchain a huge painkiller. You have private banking. Private banking see in digital asset space a way to provide to their clients new asset classes, being any financial asset being tokenized, real estate, art being tokenized, open and develop new products and get access to a younger customer base, you guys. Corporate investment bank. Corporate investment banks are trying to transform their capital markets. Why? In order to gain operations efficiency, they can issue directly now bonds, equity, but also in order to reach and distribute themselves and reach a new client base. Goldman Sachs, when the global head of digital assets of Goldman Sachs said that in 10 years, the whole financial industry will actually be built on blockchain, it shows you that we are moving there, but we're not there yet. Why? There are basically a few points that are still holding banks from going all in. The first thing is security. As we're building our digital economy for the next decades to come, the security, the custody, and trusted custody of your digital assets is an absolute necessity. And let's face it, it was impossible to build an infrastructural solution with products that were designed for the retail market. Blockchain was adopted by consumer first, retail first, not designed for institutions at all. So what is missing? Private key management in the context of crypto trading is a risk banks really don't understand. They know how to authenticate their clients. They're very good with it. They've been doing that now for the past 10 years, 15 years in a digital way. But managing a private key is a risk they don't know. Market data. All you read about the security of oracles, for instance, this is also something that is preventing banks from moving to a completely DeFi setup. Smart contracts. I don't know about you, but I've actually spent now 2 days here. The number of security companies I've seen auditing smart contracts is huge. Smart contracts are still vulnerable. Counterparty risk. Counterparty risk is something banks don't like. They've been knowing they've designed a whole industry in order to manage this counterparty risk. It's called S&Ps. It's called sorry, I'm missing the word, but all the organizations that are actually evaluating the credit risk of the counterparty. This doesn't exist in crypto. Byzantine faults. How do you know that when you're actually operating on a public blockchain, all the nodes won't compromise and fork the blockchain? And last, post-quantum. Post-quantum is far, but it's a reality. If we decide to transition to a blockchain setup, what happens the day quantum threat becomes a reality? The second thing is regulation, obviously. Banks need a framework. So first, the standards. Banks have spent 30 years, 40 years developing standards such as SWIFT, EBIX. I mean, they've invested so much in efforts to actually comply with these standards collectively. The problem is blockchain, and the problem with blockchain today is that there's absolutely no standards. We know what technology will win. And that is something that is really holding up banks from actually moving going all in. I talked with architects in banks, and so they're very, very worried about the security holes, but also all the training you need to develop for people to actually be able to comply, to understand the new framework that blockchain is bringing. Custody. Custody is, of course, one of the cornerstones of what a bank is today, but what is a custody in a decentralized environment? If you actually just give your private key back to the bank, it seems that we've invented the most beautiful technology in the past decades in order to have the irony to recreate a mega third party. So what custody needs to look like, and what does the regulator understand of custody? Let's say it's something like multi-party computation. What is custody in a keyless environment? Those are questions that really make banks anxious. Exchanges and data. In order to provide to your client a net asset value at the end of the day, you need a data that is regulated. This has started for the past years. Now we have few new data providers, but it's not enough. Ownership. What is ownership in a crypto world? You've seen that when you look at Revolut, what they did, they decided to first expose their clients to crypto by pooling assets in an omnibus account. You were exposed to Bitcoin, for instance, if you were buying Bitcoin, but you didn't own the Bitcoin. They've moved now a year later to a model that looks like all the wallet where you actually have access to your private key. Banks don't know how to deal with that. Do they give access to the private key? Do they pool the crypto assets of their clients? These are things that remain unanswered. Sovereignty, this is a big issue. I mean, you remember the old crisis when the Facebook started Libra of sovereignty, who actually keeps the sovereignty over a currency. These are questions that are absolutely huge. And last, collateral. Obviously, collateral is the basis of banking when you think of lending. Collateral in a crypto space is still very difficult to manage. Finally, operations, integrations. It is quite easy, or it is doable today for banks to open Bitcoin custody for their clients. But what happens if they want to operate DeFi space? Do they need to integrate with MetaMask to give access to their clients to Ethereum? What if they want to give access to Solana? Integration is a big issue, and banks won't move to DeFi fully until the roads are clear and easy for them to navigate. Usability is a huge thing. I mean, if you talk to your parents about actually buying Bitcoin once or crypto, even creating an account on Binance is extremely scary for someone that was not born in that world. So usability is a big one, improving UX. Insurance, this is also a big one. Until now, things were reversible, meaning that if banks were hacked, it was possible to move back and to discuss where the problem happened. In a context of blockchain, insurance become extremely important. The performance, obviously, everybody talks about moving payment industry into blockchain, but in order to match what you do, for instance, the performance you have with a stack like the Visa has, you need to improve the performance that blockchain are delivering today. The cost, you're well aware of that, operate on costs that you can't actually master, like the gas, you can't control, sorry, actually like gas cost. It's very difficult. They lack predictability. We're far from having that model yet. The environment, I mean, it's all became a big thing with Elon Musk, right? But environment is also super important. Today, they all need to have in their yearly statements a proof that they start complying with environment requirements. So until we have a very clear view of what is the environmental impact of the blockchain that banks, institutions will use, this is going to be something that will be for them very difficult to address, and they won't take the reputational risk of being seen as players that don't comply on that side. Liquidity, I touched a bit on that as well. Compliance, of course, for those who were in the talk previously, banks are heavily regulated. They need to be compliant. Since 2007, compliance departments have actually been multiplied by 10. It's actually extremely heavy, and understanding compliance from a blockchain environment is difficult. Now, companies like Chainalysis are doing a great products for banks that help them actually assessing that risk, but it's still not mature enough. And last, cryptography. At the end of the day, banks are not the workforce in banks, even developers are not, PhD in cryptography. And at the end of the day, if you want to structure product, to structure smart contracts, you need now a new competence that is not easy to find, which is cryptographer. Of course, the culture. It's two different worlds, the blockchain space, the traditional space, not the same mindset. This is something that will take some time to bridge. The authority, who controls what, who has the ownership of what, this is something I touch base on. The jobs, as I told you, there's definitely new jobs for them to actually, for the banks to actually put forward, very difficult to recruit, it's a space they don't know. The sanctions, it was extremely easy to operate in a world where they actually knew very well the sanctions like FATCA. Now, what happened if a country ban, for instance, Ripple? They operate in a global basis, and the absence of clear rule on sanctions are very difficult. The tools, they are not there yet as well. The banks don't know how to use the tool that the blockchain space is developing. And last time, they operate on very, very different time frame. 3 months in a crypto startup is 2 years in a traditional bank. And that is something that is very, very easy to, very hard, sorry, to actually turn around. So as a conclusion, what we need for banks to become actually hodlers is patience, because it's going to take a long time. They are getting there. They will get there because it's a huge financial opportunity, because it will help them actually get control over the costs. Question is, are they going to go there just as service provider or also as custodian players? Balance is also what we need to define. It is impossible to go back to a model where banks are the third party and the centralized institutions pooling crypto assets. This doesn't make any sense. And last, resilience, because the road is going to be long. Thank you.
Does anyone have any questions? Sure.
My understanding is about US banks, the ones that will propose crypto will most likely all use for custodying something like NYDIG or another company. Do you know for French banks if they have any plans or at all?
You mean on what to use to do the custody?
Yes.
So the French regulator has been quite clear with the definition of what is a custodian. It's the entity that owns the private key from their clients. Now, what banks prefer actually in France is HSM, because there's clarity over what is ownership. Technology like multi-party computation, that actually break down the private key and create keyless solution are difficult to apprehend. It looks like from what the AMF is positioning itself, if the custodian, so if the bank has access to the recovery plan, even in an MPC solution, they can actually become custodian. But at the end of the day, they need to have ownership of the private key.
Yeah.
When banks will join the party, do you think it's going to be with CBDC or crypto assets as we know it now?
So it's an interesting question. To me, there's different asset class, and there's going to be different timing, and there's different banks, different institutions. So custodians are actually already extremely worried about the disruption that a Coinbase is doing in the market, a Gemini, a BitGo. They are actually moving this year to the space with offer on the most traded asset, be it Bitcoin and Ethereum, basically, and developing by the end of the year. You will see by BNY Mellon, we'll see by BNPP, you will see by I would say half of the largest custodian. You'll see them developing custodial offer for their clients that are asset manager, that are hedge funds, because today they are saying their clients moving to, once again, Gemini, Hagège, etc. So that's for the custodian. Corporate investment bank, it's going to take some time, because what they're doing is completely disrupting the model they have today. Corporate investment bank will be built on blockchain, and they will issue directly bonds, shares. Regulation is absolutely nowhere here. It's very difficult to have a framework on what type of security tokens do you need to do the custody? Do your clients need to do the custody? Do you need to use a regulated custodian? There's a lot of uncertainty around that. So we are at the proof of concept stage. You have the proof of concept with the EIB bond involving Goldman Sachs, Société Générale, etc., etc. Other banks, Société Générale actually had already done proof of concept a few years ago. It's going to take time because it's a heavy change in terms of organization. But once it changes, that's where most of the growth will come on the digital asset space for the banks. It enables them to actually directly distribute to new people. Before, when you were issuing a bond, you had to you would sell them to a very specific class of investors. With tokenization of bond, what it enables you is to actually directly access the retail market. So the opportunity for them is big. There's no doubt that it will reduce their operating cost, but the change is actually very deep. Private banks will move actually quite soon, a bit like the custodian. So next year, the year after, we'll see that private banks are seeing their clients going to Swissborg, going to Binance, going to Coinbase because they want to be exposed to this new asset class, and for them it's a huge loss, and so they're still not sure whether to start with crypto assets and Bitcoin or directly start with tokenized assets and offer their clients a new asset class. That will, to me, from what I see, private banking are transitioning next year, the year after, a bit after the first custodians. And then after retail, well, retail I move always after. Neobanks will move before, have moved before. And so I believe that on the retail side, it will come mostly from crypto neobanks and neobanks that are much more agile than the retail banks.
Hi, thank you for the talk. My question is about taxation. How does taxation, in your understanding, modify the way banks interact with cryptography and DeFi mostly? And is there some, for a protocol, a DeFi protocol, is this something to consider, like giving some taxation facility as a competitive advantage over other protocols? And is it even a blocker for the banks?
They don't understand anything. So yes, the answer is absolutely yes. And you see it as well with actually on the payment industry. I mean, companies like Request for the people who actually know Request, they provide request payments. But what really made them jump from a startup to a scaling startup is the fact that they were providing the accounting that goes with it. Everybody is extremely lost, and especially if you operate in a global environment, yeah, that's definitely a point that is also of concern. And I would definitely, you're absolutely right. This is a huge differentiating factor for them, enabling them to automatically deal with their tax requirements. Definitely. I mean, they're not there yet at all. For them, it's even a problem that is big, but that. First the technology and then there.
Hi, Clarisse. That was an interesting talk.
Okay.
I have a question. What's your perspective on neobanks like Revolut getting into crypto? Because now we're seeing a lot of these digital banks, right? And they're providing services, and a lot of younger generation are opting to use digital banks like Revolut, N26, instead of the traditional ones, right? Because it's easier. And these banks themselves are starting to get into crypto. And on top of that, we're also seeing kind of neo-crypto banks like Nexo, for example. So what's your opinion on this trend? And are they giving the traditional banks a run for their money? So
Revolut has been a huge trendsetter in that space. I mean, most of the growth of Revolut in 2019 is to be attributed to the fact that they could expose crypto to their customer. They attribute to about, I think it was 3.5 million, the number of users that came to Revolut because of their ability to easily get exposed to crypto. So absolutely, neobanks are moving first, will move first. Now the question is, how are they going to move? I like personally. I like what Revolut did, which is first getting exposed, but with always the idea in mind to actually enable the consumer to move their private key the way they want it. So to be a sort of neobanks and wallet at the same time. We see as well some crypto wallets moving to fiat as well, because it also enabled them to have easier settlements. So yes, to me, as I was telling, on the retail side, neobanks are definitely driving the trends. You see as well some neo-broker dealers, such as Bucks, for the people who knows them, Robinhood, of course. I mean, all their growth is attributed to the fact that they were able to expose very easily usability again, UX again, consumers to the crypto space. Yeah.
Any more questions from anybody? No? Okay, brilliant.
Thank you very much.